Lenders look at two things when they want to make decisions, right? They look at your capacity to pay and they look at your willingness to pay. Please, could you shed more light? Think about buy now, pay later and outgrowing e-commerce ability to participate in looking at what is happening in Klarna and in Affirm in the West. Do you think those kind of things can be applicable to? We don't have anything, and yet we are saying this thing will work, it will work, it will work. Please, how is it going to work? A lot of people talk about or hear about credit infrastructure, lending, buy now, pay later. What do all those things mean? What modules are involved and who are the players? So lenders look at two things when they want to make decisions, right? They look at your capacity to pay and they look at your willingness to pay. Please, could you shed more light on that, those two decision points?
Those are basically, they represent two things that lenders want to look at. Your capacity to pay really just looks at your financial transactions. How much comes into this person or to this bank account in this case, and how much goes out. How much is left behind when money goes out? What is the spend that goes out from this bank account? That is capacity to pay. How much capacity you have to repay that loan plus the interest that lender is willing to charge on the loan. Then there is your willingness to pay. Willingness to pay is looking at your credit history. Have you taken loans in the past before, and have you repaid those loans? Were you ever in default before? How much default were you? Lenders look at your credit history to determine, okay, well, if this person has always been steady with loan repayments in the past, then this person is likely to be steady with loan repayment for my own business now.
Awesome. So coming in from that, right, let's go into this very fancy and it's trending right now, this term they call buy now, pay later. What do you think about buy now, pay later and outgrowing e-commerce ability to participate in buy now, pay later? What are your thoughts, Tope?
Yeah, so buy now, pay later, it has always been in existence. We've always had buy now, pay later. You could go to a bank, you could get a car. You could get a car, for example, a car loan. That's buy now, pay later. You could get an asset, for example. You buy a TV or a fridge. I've used buy now, pay later, at least asset financing, as they call it in the microfinance banks, to get a few gadgets and appliances in my house.
You've used it as a bank manager, or how did you get access to that kind of thing? I doubt that somebody on the road has access to that kind of resource.
Well, the thing is, these banks already offer it. If you go to a microfinance bank now, I'm sure you can, walk to their front desk and tell them you want asset financing. And then they would ask you all the things that they need to ask you. They check your demography. They look through your bank statement to determine if you're able to pay what you want to get. They look through your credit history to determine if you've paid loans back in the past. And then you eventually just send them a link. Usually they want to work with structured e-commerce services. I'm sure no lender wants to tell you to use GG, for example. So, you probably send them a link for that item on Jumia, on Konga, the popular e-commerce sites, and then they finance it for you. They pay to the e-commerce site, and then that stuff, what that gadget is delivered to you, and it's in your house. You can start to use it. What's happening now is that, firstly, there are folks now building structures to want to aggregate these businesses that can offer assets on credit to consumers. There are people now building businesses around that to aggregate all those businesses into one place and remove the friction that you as a consumer would experience to be able to get that asset when you want it.
Okay, Nifemi, I'd like you to weigh in on that, but I want to take it through another turn. So as you was talking, I just felt left out, right? I don't have any credits of any sort, so I don't know. And to a reasonable extent, I think I am bankable. I have the willingness to pay. I have the capacity to pay, but I'm sort of cut off from credits in Nigeria because I don't have access to these things. Looking at what is happening in Klarna and in Affirm in the West, right? Do you think those kind of things can be applicable to Nigerian consumers like myself, because we want to access credit for shoes, bags, or whatever it is we want to buy?
Simple answer, definitely yes. And I would say that no better time than now, right? Because if you look at the Nigerian market, two things have happened in the last, say, 2 years thereabout, or two specific sectors have grown and have started to reach market acceptance. The e-commerce, definitely, with how big Jumia got, and then lending, especially uncollateralized, or the digital lending guys, as we call them, right? The likes of Carbon, the likes of Fair Money, the likes of Branch. We've seen how much, at least from what they're raising, right? You can tell that there's some level of validation, and even the numbers that they shoot out, where, these guys are probably lending more than some commercial banks at the moment, right? And what that tells you is people are ready to buy online and people are ready to take credit. And if you match these two things together, that's like the intro to BNPL 101, right? When you have e-commerce and you have lending and you merge it together, either it's the same person providing it, either it's two of these players in those spaces coming together, or somebody that is coming to sit in the middle to bring these two people together. BNPL can now start to happen. Like Temitope mentioned, right, that we've had it since. And I think in earlier conversations, I gave the example of bank staff that had always been writing checks, right? It's the same thing. What we can now start to see is, in fact, already started to happen, right? A lot of platforms are now saying you can get gadgets on credits, come and pick up an iPhone, pay over the next 6 months, come and pick up a Samsung Curve TV, come pay over the next, 4 to 6 months. And I personally am also a testament to the fact that I'm almost certain that BNPL is the way to go. Because if not, I won't be spending my nights on building an amazing BNPL product that people will get to know about really soon. So yes, definitely, definitely, I can tell you for free that the market is ready, opportunities are huge, and barring any unforeseen regulatory brouhaha, it could possibly be the next big thing.
I like your optimism, but I will still delve further, right? So, what makes products successful are things that already happen offline, and then you're sort of just using technology, to take them online. So, people refer to them as digitizing trust centers, so that if market women contribute together in Esusu, I know your house. My daughter and your daughter, they go to the stream together. Our sons hang out together, and you're owing me, I'll come and get you, right? The earlier conversation you had, or the earlier analogy you gave around the bank workers having access to credit, is as a bank worker, your check is not supposed to bounce. So there's somewhere we will catch you from. Other advanced economies have your social security number that is tied to your credit score, and everybody guards their credit score very jealously. If you're moving down to Asia, advanced economies or economies that are really trying, like the Indian economy, have the Aadhaar score. Nigeria, we don't have anything, and yet we are saying this thing will work, it will work, it will work. Please, how is it going to work?
So first and foremost, right, I would say that the Nigerian tech space, or the Nigerian fintech space, we thrive on circumvention, right?
Hmm.
Put a challenge in front of us and
Awesome.
you'll find that somebody has built a way around it. Simple answer to your question is, if somebody was not trying to solve this problem that you are talking about, Temitope will probably not be working at Indicina right now, because that's exactly what they're trying to do. That's exactly what they're trying to do. They're saying that, all the loopholes that you have to climb. I remember applying for a commercial bank loan like 2 years ago. After 2 months of applying and they didn't get back, they now came and said they were ready. After that, they came back and said they were ready. The process of applying, sending them stuff, before the loan even came through, it took another 6 weeks, right? That's how painful it is. But we are now in an era where digital lenders tell you that in 5 minutes you get a loan. What companies like Indicina are doing is they are taking up a bunch of metadata and even more structured data, putting it together inside the basket, almost like you're playing Ludo and you shake the tin and you pour double six, right? And you can get the loan. Because at the end of the day, if you look at it, that's what they're doing, right? And if, as a digital lender, I'm already taking the risk of giving a Nifemi a loan, or giving an Ifi a loan, or giving a Temitope a loan, what difference does it make if I now even take it a step further to make the loan safer by saying, I'm not giving you money that you go and blow on Bet Niger or money that you go and use to drink on Friday. I'm giving you money that you're using to buy something. I'm not giving you the money. I'm paying the person, and I'm almost certain that if you're buying TV, it's TV that you got. Whether you now go back and sell the TV for lower than the loan, that's a separate conversation entirely.
Exactly.
But at least, as far as profiling is concerned, I know that, okay, this person bought a TV of 250K. Maybe he's living larger than his means, no problem. Or, it also tells me this is person's taste or affordability.
Okay, so a lot has been said about Indicina. So I want you to shed more light on that, since they are leading the pack in this credit risk thing, because it almost looks like they are digital babalawos, quote and unquote. So throw a lot of things into the mix it up, and then spit out a value and be like, yeah, you're safe. Give Ify the loan. I want to find out at Indicina, to what extent are your technologies advanced, to make this kind of decisioning possible? Do you employ machine learning or artificial intelligence or even deep learning? To the extent you can divulge, I know a lot of these things might be protected by IP and is your trade secrets.
Thank you, Nifemi, and thank you, Ify. So Nifemi mentioned, there are two aspects to our business currently. There is the part where we automate that lending process from beginning to end. In Nifemi's example, he reached out to the bank. They didn't get back to him until two months later, and then 6 weeks later, they wanted to then disburse the loan. We have a product that just, that allows any business really that has the capacity to offer credit to be able to set up a digital channel within a few days. And so you don't have to wait 2 months to hear back from the bank. You apply on your phone, on web, and that whole process is done within minutes. Now,
I'd like to interrupt you, sorry, because you said something very important, and it's very also important as well that we capture the value that your company is creating. So are you saying that Ify, as a business, I have a database of some sorts? Maybe I'm affiliated to markets in Lagos, Balogun, My 12, and the rest of the other markets, that if I bring my data source to Indicina, that they can layer on custom or bespoke algorithms for me to make decisions. Is that what you're saying?
Yes, if we do have the data. For our credit models, yes, we employ machine learning for our credit models. There are two types of data that we would look at. Is it your data, first party data? Is it your own data? Have you been giving out credit for a while and you have like a whole, years of data that we can work with? Or are you giving us third party data? If it's your data, we look at things like the customer themselves. What are the demographics, age, location, income, and then we look at the data on the actual loans that you've been given out for, that the repayment schedules, who has been repaying. So we get all that data, and with that we can build a risk model for you. Really, what a risk model will just do is an admissions model that allows you to determine the creditworthiness of these applicants. Now, in case you don't have that much data, but you are willing to lend, that's when you can give us data from third parties, like the bank statements, or even the credit bureau data, or even the telco data. And with that, for example, we can build some sort of rule-based expert scorecard for you that still helps you to discriminate against potential defaulters. We also build affordability models based off these transactions. Basically, what we're saying is this person is good for credit, right? Because you have a risk model. But we then say, aside from the person being good for the credit, this is what this person should be able to afford based on what we see from that transaction data that you have given us.
That's interesting. Thank you. Kudos to Indicina.